All right, so this afternoon we're going to be looking at the introduction to Fibonacci. Introduction to Fibonacci. Now, the Fibonacci tool is one very powerful instrument that's on our MetaTrader platform, which is really effective, in trading. It's used in trading. Now, we say that what is a Fibonacci? What is a Fibonacci sequence? And I would say Fibonacci sequence is one of the most famous formulas in mathematics, and each number is in the sequence is the sum of two numbers that precede it. So the sequence goes thus. We have 0, 1, 1, 2, 3, 5, 8, 13, 21, 24, and so on. The mathematical equation describing it is xn plus 2, that is xn plus 1 plus xn. Now, this Fibonacci tool was designed by a mathematician, and the name is Fibonacci. And this is a mathematical sequence, which is used in deriving this very powerful tool, which is a very, very good technical indicator used in the financial market for trading. So you can see the calculation. We have 1, 1. 1 plus 1 gives us 2. 1 plus 2 gives 3. 2 plus 3 gives 5. 3 plus 5, 8. 5 plus 8, 13. 8 plus 13, 21, and so on and so forth till God gets to 21 plus 34, which gives 55. So this is the Fibonacci sequence. History, the history of Fibonacci. Who was Fibonacci? You can see on the right, left-hand side there, European mathematician who lived between 1175 and 1250. Real name is Leonardo of Pisa and is the author of Liberace or Book of Abacus. Now, this individual was remembered today because of the Edward Lucas. The Fibonacci sequence is named after Italian mathematician Leonardo of Pisa, known as Fibonacci. This sequence was initially introduced in India by Indian ancient mathematicians around 1300 years back. That's 1,300 years ago. This sequence was introduced to West in 1202 by Leonardo of Pisa, aka Fibonacci. So Fibonacci in forex trading. Now, as traders, we're not interested in the numbers in this series, and that's just the truth. All those numbers is not really too uh really important to us. So what is important to traders are the ratios or the differences between the numbers in the series. And these are called the Fibonacci ratios and can be used to identify likely support and resistance levels. We all know that one of the major concepts, the key concept to trading, is the support and resistance. And there are many ways we can identify the support and resistance. We can use our horizontals, we can use trend lines, we can use psychological levels, and now we can see that even the Fibonacci tool can be used to identify support and resistance levels. And the most popular ratios or levels are the Fibonacci 23.6, Fibonacci 38.2 percent, and the Fibonacci 61.8%. Now there are other ratios that can be used, but it's up to you to decide how far you want to take the analysis. And in addition to this, there are two other levels, that is Fibonacci 50% and 100%, that are often included in the analysis, although they only appear as a Fibonacci ratio at the very beginning of the series. Now, usually when we trade, we pay a lot of attention to, I personally pay a lot of attention to Fibonacci 61.8 and Fibonacci 50. Those are very, very key levels where price could either retrace or reverse, on the chart. Fibonacci retracement. Now, most traders use Fibonacci retracement for qualifying trade entries. If the retracement has only come down to the 23.6 level or less, there is a likelihood it is likely to be a further retracement. A very deep retracement, one that retraces further than 61.8 level is often a sign that price price is not likely to continue in the direction of the original swing. If you're waiting to enter a trade on the retracement of a move, there is a sweet spot in which you'd like to see price bounce and hopefully continue in the original direction. That sweet spot ranges from about the 38.2 level to the 61.8 level. And we can see that on the chart. You can see right on the chart, you can see a swing high, a retracement back to Fibonacci 38.2. Then we can see a further continuation, afterwards. Swing high, retracement to Fibonacci, and a continuation. So how do you draw this Fibonacci retracement in an uptrend? Now look at the screen. You can see you click on the Fibonacci retracement button. You can see the symbol, right up here, and it's on our MetaTrader. You click on it, and your cursor will change from an arrow to the Fib retracement, indicator. Now, while buying into an uptrend, you see evidence of a potential pullback. Now, this is an uptrend, a potential pullback. Click the mouse at the low point of the beginning of that trend to set the first retracement calculation start point. Then move the mouse to the current high, that is the B, and click at the current rate to finalize the coordinates of the 2 points. This calculate the distance of that trend and will now display the retracement calculations. Now, this will be better, understood when we start the practical side of this class. But basically, what we're trying to say is that in an uptrend, look for a swing high, you look for a retracement, and you project price to break out upwards, from that region. So here again is an example, of a retracement in a downtrend. So we can see the trend. At the retracement, price tested the Fibonacci 50, which is acting as a resistance level. Then you expect further bearish continuation, afterwards. So the Fib levels can always be used as either a resistance or support level, that can help us know the direction of the market. Important Fibonacci levels are Fibonacci 38%, 38.2% precisely, 50%, and 61.8%. These are very, very important levels on the Fibonacci tool. And we can see that, in the example we can see on the screen. We can see 0%, 38.200, 0%, 50%, and 100%, 0%, 61.8, and 100. And you can see that reversal took place at each of these levels, or rather continuation, rather in an opposite. There was a retracement and a continuation, retracement and continuation, retracement and price either level, and there's a continuation. So these are levels where price has consistently proven to either retrace or reverse. So the other one we saw is in an uptrend, and we can see another example in a downtrend. We have a downtrend, price retrace to Fibonacci 38.2, then further continuation, downtrend, retracement to Fibonacci 50, further bearish continuation, downtrend, retracement to Fibonacci 61.8, and further bearish continuation. So how to use Fibonacci retracement with support and resistance. Now, one of the best ways to use the Fibonacci retracement tool is to spot potential support and resistance levels and see if they line up with Fibonacci retracement levels. For example, here on the screen, we can see a potential resistance level here, resistance turned support level here, and coincidentally, it lines up with one of the Fibonacci levels, that is Fibonacci 50. Now, that's a double confirmation that we expect price, to actually bounce into the upside direction, because we found the retracement, we found the resistance level to line up with a Fibonacci level. So that's one of the ways to get confirmation, when trading. How to use Fibonacci retracement again with a support and resistance. You can see there's a USD CHF on the daily time frame. Price, hit a support level, which also, we're looking for an uptrend. So we're dragging our Fibonacci from most recent low to the most recent high, and we're expecting a further bullish continuation. But then the support level coincides with the Fibonacci 50 again, which is a critical support level in this case, after which the price continued in the bullish direction. Now, how to use the Fibonacci tool with trend line. Another good tool to combine with the Fibonacci retracement tool is trend line analysis. And here's a 1 hour chart of AUDJPY. And as you can see, the price has been respecting a short-term ascending trend line over the past couple of days. Now you can see here we have an ascending trend line and price has been respecting in the sense that price has been trading around this trend line, bouncing into the bullish direction each time price touches the trend line. Now, we now plotted the Fibonacci, retracement tool on this trend line. So we plotted the Fibonacci retracement levels by using the swing low at 82.61, and that's somewhere below here, and the swing high at 83.841. So this is a swing high. Notice how the 50% Fibonacci 50.0 and 61.8 levels are intersected by the rising trend line. Now, when we drew the Fibonacci, okay, sorry, this is a swing low, and we have the swing low right here and the swing high. The Fibonacci 50 and 61.8 intersected the rising trend line. Now, this is Fibonacci 50 here, and this is 61.8. Intersected the rising trend line, giving us, the confirmation that price will continue going, higher. So it acted, both Fibonacci 50 and 1.8 actually acted as a support. They both acted as a support to price, giving us a view that price can continue going higher on the trend line. How to use Fibonacci extensions to know when to take profit. Now, the next use of Fibonacci will be using them to find take profit targets. In an uptrend, the general idea is to take profit on a long trade at the Fibonacci price extension level. You determine the Fibonacci extension levels by using 3 mouse clicks. So when we get to the MetaTrader, we'll practicalize this. We'll click the mouse 3 times to get the Fibonacci extension levels. First of all, click on the significant low, then drag your cursor and click on the most recent swing high. Finally, drag your cursor back down and click on any of the retracement levels. This will display each of the price extension levels, showing both the ratio and corresponding price levels. So again, to use Fibonacci extension levels to know when to take profit. So we'll go back to the previous example we saw earlier, the daily chart on the USD CHF. And here we can see that price eventually broke through the former high. We have a former high here. This is the previous high. Price broke through the former high and continued in an uptrend. Don't forget, we found a support level on Fibonacci 50 from where the price bounced into the bullish direction, and here we have price breaking above this current high and trending higher. So this would have been the good levels to take profit using the Fibonacci extension. You can see the Fibonacci extension levels, profit taking level 0.615, 1.000, and 1.615. Those are the Fibonacci extension levels, which could be used, to set the take profit for that particular setup we can see on the USD CHF on the daily time frame. Again, another example to use Fibonacci extension to set take profit levels. Here we can look at the Euro USD on the 1 hour time frame, and we can see the price is trending downwards. And it looks like buyers were exhausted. Look at all those red candles. You can see the red candles, showing a downtrend. Now price hit the Fibonacci 0.615 again, and from there we can see that price is trading downwards, and eventually price approach the swing low, the recent swing low. So these are Fibonacci extension level 0.615, and from there you can see that price began to drop downwards. So in that downtrend, we can see the Fibonacci extensions are used as support, support, support. So all these levels provided a support zone, for the price. So how do you use the Fibonacci level to set our stop loss? Now, there are simple ways to set your stop loss and the rationale behind each method. Number one, you can use the next Fibonacci level as a stop loss. When you're trading with the Fibonacci levels, you can use the next level. So the first method is to set your stop just above the next Fibonacci level. So if you're planning to enter at the Fibonacci 38.2 Fib level, then you will place your stop beyond the Fibonacci 50%. And if you feel like the Fibonacci 50% level will hold, then you put your stop past the 61.8 level, and so on and so forth. So let's look at another example on that. So this is what we're saying. If you're on the chart, you expect, price to move in this bullish direction. You can see we have Fibonacci 38.2. There's a Fibonacci 23.6, 0.26. So if you've placed your trade and your trade is approaching 38.2, you can set 23.6 as your stop loss. And as your trade breaks above Fibonacci 38.2 and approaches 50, you can move your stop loss of 23.6 to 38.2. So that way you are doing what is called a manual trailing stop, moving your stop loss as price is breaking each of the Fibonacci levels. It's a very recommended way, to set stop loss while trading. How to use Fibonacci to place your stop loss again? If you had shorted at the 50%, you could have placed your stop loss order just past the 61.8 Fib level. The reasoning behind this method of setting stops is that you believe that the 50% level will hold as a resistance point. I've explained that in the previous slide. Just use the next, as your price is going higher, use the previous Fibonacci level as your stop loss. You enter the trade as price broke Fibonacci 23.6. You use Fibonacci 0 as stop loss. When price breaks 23.6 to 38.2, move your stop loss to 23.6. As price breaks 38.2 and approaching 50, move your stop loss to 38.2, and so on, and so forth like that. The second way to use Fibonacci level as stop loss is to place the stop past the recent swing low. Yes, the class is being recorded. That's for Joshua, and the recording will be shared. So place stop past recent swing low and swing high. Another way is to set a stop loss will be to place them past the recent swing high or swing low. For example, when the price is in an uptrend and you're in a long position, you can place a stop loss just below the latest swing low, which acts as a potential support level. When the price is in a downtrend and you are in a short position, you can place a stop loss just above the swing high, which acts as a potential resistance level. This type of stop loss placement will give your trade more room to breathe and give you a better chance for the market to move in favor of your trade. So we'll come back here now. You entered a buy trade. This is a swing low. That becomes your stop loss. Regardless of how price is going up, that swing low remains your stop loss. So it gives your trade more room to breathe. You are not going to be choked with the stop loss being close by. If you are in a downtrend, then you make the recent high your stop loss and you give your trade enough breathing space, to move downwards. So you can either use each of the Fibonacci levels and you manually move your stop loss as price is going up, or you use a recent high or low as the stop loss. All right, so that will be the end of this class today. This is the first session on this Fibonacci. This class is being recorded, and the recording will be made available to us in our WhatsApp group. So I want us to join us on Wednesday, where we'll have the practical side to this class. Today, we've only looked at the theoretical class. So please don't miss the Wednesday class, where we'll have the practical session on Fibonacci trading. Don't forget we have our CPI live trading on Wednesday by 1:15 p.m. and you're encouraged to join this class. If you don't have a funded account, go ahead and fund your account now. If you have a live account already and you don't have funds in that account, you may not be able to trade with us on Wednesday. So I encourage you to go ahead, reach out to your account manager and fund your account so that it can be a part of that live CPI trading session on Wednesday. We had NFP last Friday and I tell you it was a blast. The trade went so well and we're hopeful we'll have same kind of result, or even better result this Wednesday. All right, that'll be the end of this session. I wanted to reserve. Okay, let me take one or two questions, but then we can't do practicals now. Practicals will be on Wednesday. So if you have a question that is not really practical related, you can ask, and I'll attend to you while we wait for the practical session Wednesday. So I would just encourage us to type, in the comment section. I'll pick a question and respond. So if you have a question, you can go ahead to ask. Okay, Farouk is asking, how can we use it on phone? Okay, that will be Android when we have the practical class, practical session. But then, yes, it's possible to use it on phone. It's possible. It's available on your phone, Android, iOS. It's available. You're welcome, Mr. Michael. So if you're based in Abuja or you're based in Lagos, you can walk into any of these two locations for physical training, at our offices. We have our head office in Nigeria in Abuja, and we have our regional office in Lagos. And we have physical training at these two locations every Tuesdays and Thursdays, 10:30 a.m. on Tuesday, Thursday for Abuja, and 11 a.m., at the Lagos office. You can walk into these two offices. Now, on Tuesdays, we normally have what is called the beginner's class. It's for those who are new to forex trading and need the foundational knowledge. While on Thursdays, we do both the intermediate and the advanced, classes on Thursdays. So I will encourage you to to join these classes if you're based around Lagos or Abuja. And peradventure you are not in those locations, you can always join us, for online sessions like this, where we still give you the education on how to trade Forex. Farouk Olamide, can we use Fibonacci on phone too? Yes, I just responded to that some minutes ago. You can use it on phone. The tool is available on your MetaTrader. Either you're using the Android version or the iOS version or any other version. The Fibonacci tool is available there. All right, that'll be the end of this session today. Take care and see you some other time. Bye-bye.